Pat Walker here with Mission Winners. Time for the top stocks this week that you should have on your watch list. So we're taking a look here. The first stock on the list, PACS Group, group number one. I always sort by industry group rank first. This is an important foundation for everybody. Leading groups, leading stocks in those groups. Money goes there. Group number one, composite rating 98. They're looking for a 99% increase in earnings this year over last year. All right. Timeliness is A. You can see this bounce setup. Now, this is not a clean and simple base breakout. This is a pullback setup. This is the 50-day simple. This is the 21-day exponential. This is the 8-period exponential, the yellow line. Could this be a setup bouncing off the 8 EMA? Well, normally when it bounces off the 8 EMA, it continues. It continues. Lifted up several days here. It's pulled back again. B plus accumulation distribution, composite rating 98, as I said. Potential buy, if the market's okay. Take out the highs of this bar right here with good volume at 34.70. PACS 34.70 is what we're looking for. Let's go on to the next one. And it is Ensign Group. This is group number one, medical long-term care. Again, it's group number one. It's the best. You can't get better than that. Earnings per share rank 94, composite rating 98, B plus accumulation distribution. Okay. Now, last quarter's earnings were up 14%. Last quarter sales were up 12, but it's got an earnings per share rank of 94. Notice this. It ran up, it pulled back, okay, on a slight pickup in volume, but the selling volume was not that heavy in relation to the buying volume here. Look at those big green bars. That's the work we do at Mission Winners, is analyze these charts. Pulled back here, bounce off the rising 21-day, potential buy, taking this out at $140.90. Now you can say, how did you get that? Watch right here where the H is. When I put the cursor on the line, it's $140.81. It doesn't need to be a dime higher just to get to the next round number. $140.90 right there. Could be a buy. Now I've got to put a caveat on every one of these. We need good price action, good volume action, and we need to see a good market. The M in Mission Winners. We want to see a good market. So there's number two, Ensign Group, right there going across these tops. And again, this is group number one, okay, with a composite rating of 98. Let's move on to the next one. Here we go. And it is, I'm going to clean that out of there, Eldorado Gold. You can see these tops across here. And one of the things I do here, and I teach this all the time, is simple bases. It's just a simple base. It was a simple base here. It's just a simple base. What catches your eyes? Well, there was good volume that came into that bar right there. Good buying volume. Earnings per share rank 86, composite rating 99, B plus accumulation distribution. Last quarter's earnings up 560%. Last quarter sales up 30%. Rising earnings estimates. They're looking for a 131% increase in earnings this year over last year. Institutions look at that. And as I stated, relative strength is 95, leading the stock into new high ground. So what are we looking for? Take out the highs of this bar right there, okay, at 1740. If you watch the H and put it on there, it says 1730, just a dime over that, 1740. What are we looking for? Good price action, backed by good volume and a good market. That's what we key on, and it works for us. Kaufman and Broadholm. This is a pullback setup. As you can see, it's group number 49. Earnings per share rank 94. Composite rating 93. Timeliness is A. All right. B plus accumulation distribution. Now, it rallied up here, as you can see, and it pulled back. What's the slight negative? By the way, I'm not a cheerleader. I do thorough analysis for all of our members every day on what to look for. It ran up on decent volume, but then it fell on low volume. But then on Friday, it fell on fairly heavy volume. It bounced off the rising 21 EMA. But note this, and this is important. I'm going to make this bigger for you. This is where it opened. You see the hash mark to the left? It gapped down, it fell, and then it closed above where it opened, bouncing off the 21 EMA. Folks, They found support there. The stock found support. B plus accumulation distribution potential setup. Just take out the highs of this bar. The high on this bar is 81.82. You could buy that at 81.90. 81.90. If the market's okay and the stock has good volume coming into it on lesser time frames. That's what we look for. Let's move on to the next one here. Allstate. You're in good hands with Allstate. How about that? Right here, group number is 88. It's a B plus rated group. That's still good. Composite rating's 96. B accumulation distribution. Last quarter's earnings up 136%. I always look at the earnings and sales numbers. Institutions do too. They do the legwork here. And I like to look at earnings estimates. I will just share this with you. Earnings estimates. This year, they earned 96 cents. On 2023, they are 96 cents. And again, this is the work we do. All right. We just don't, oh, that looks good. No. We check the technicals and the fundamentals. They're looking for a 1,355% increase in earnings in this year over last year. Last year, they earned 96 cents a share. This year, they're looking for close to $14 estimates. That's big. Institutions, look at that. You can see this base right across here. Now, further analysis. Fell on fairly heavy volume here. Lifted up on good volume here. Okay. Now a quiet inside bar on much less volume. Resistance right across here. Take out the top of this bar with volume. That's what it needs, and a good market. What would it be? $180. That's what we'd be looking for Allstate. And I stress, good price action, backed by volume.
Thank you for watching the video. We hope you enjoyed it. If you did, please hit like. Maybe hit that subscribe button. We come up with new content nearly every day. Also, check out the videos on the right. YouTube recommends the one on the top, and the bottom one is something we thought you might enjoy. See you next time.